Stocks have continued to struggle for direction since a hotter-than-expected inflation report earlier this week dragged markets to their worst single-day drop since June 2020, with the Dow plunging over 200 points. While inflation remains stubbornly high, investors have grown increasingly concerned that the Federal Reserve will plunge the economy into a recession as it continues to aggressively raise interest rates. Though most Wall Street experts still predict that the Federal Reserve will raise interest rates by 75 basis points at its policy meeting next week, expectations for a more aggressive 100 basis point hike have slowly been rising. Another red-hot inflation report on Tuesday all but confirmed for markets that the Fed will raise rates by 75 basis points or more next week. The Consumer Price Index rose 8.3% in August compared to a year ago, higher than the 8.1% increase expected by economists. Though that number is still down from 8.5% in July and 9.1% in June, core inflation, which excludes volatile food and energy prices, has remained elevated. Core inflation increased 0.6% on a monthly basis in August, amounting to twice what economists were predicting and double last month's 0.3% increase. Though markets still widely expect a 75 basis point rate hike, risks are now skewed to the upside, with investors completely wiping out the odds of a smaller 50 basis point rate hike following the inflation report on Tuesday. Traders are instead now pricing in a 20% chance that the Fed will raise rates by a bigger than expected 100 basis points, according to CME Group CME Data. Economists at Nomura Securities changed their forecast for the upcoming Fed meeting, which concludes next Wednesday, and now predict the central bank will raise rates by 100 basis points, followed by 50 basis point increases at each of the meetings in November and December.